Hello, hi there. How are you today? My name is Kayode Ajamale, and I welcome you to today's discussion. After I made the video on how to grow your sales, particularly for solopreneurs and micro business owners, on how to grow your sales, especially in an economy that is slow, I got a response about what about now you are able to grow the sales, but you don't know if it's actually resulting into profit. So I decided to make this second video. By the way, if you've not watched that video on how to grow your sales, you can just exit this video, or you should watch it after you're done with this. All right. So in this video, I'm going to be sharing with you how to price your product, particularly if you're a solopreneur or a micro business owner. One of the major challenges that business owners, particularly small business owner, micro business owners, solopreneurs make is pricing. And if you don't get your pricing right, you are going to have a lot of challenge. Even if you're making sales, you are going to have a lot of challenge determining whether you're making profit or not. Okay, so many small business owners, solopreneurs, or micro business owners confuse revenue with profit. All right, so but there's a distinction. Revenue is everything that comes in. Profit is what is left after every cost is paid. Revenue is everything that comes in. Your profit is what is left after every cost is paid. If you don't account for all cost, you could be working at every day and still losing money without knowing it. All right, so I made a simple example here, a simple illustration here is you sell a bag of rice for 5,000 naira and you bought it for 3,500 naira, and so logically you can assume that you made profit of 8,500 naira, but that is wrong. That 1,500 naira is not your profit. It's just the difference between cost price and selling price. And so what I'm going to be showing you this brief video is how do you identify your profit. How do you look at your total cost, your total real cost, and other things like that. So there are at least three costs that you should account for in your business. Your cost is not just the price you paid to buy or make something. There are three types of cost every business owner must understand. Now, if you're a solopreneur, a micro business owner, there are three costs that you must pay attention to. The first is the direct cost, and these are costs directly tied to making or buying what you sell. Raw materials, packaging, just take some time, transport to pick up the goods, airtime or data that you use to call up your supplier, all of those things, labor to make the product if you're the one making the product. Then there is the indirect cost. This includes costs you pay when you make nothing. Costs that are static, always you have to service them when you're not making anything, such as your rent. If you have a shop that you're renting, your shop fees, electricity and data, market store fees. If you have your, let's say you're a seamstress or you're a fashion designer, you need to service your equipment maintenance, business phone bill, your calls to people. These are indirect costs that has to go into your pricing. The third part that many people miss out is your time and labor. And this is the cost that most people forget completely. And it is often the biggest one. So you have to ask yourself, how many hours do you work? And this is where you have to learn how to estimate your time and the value of your time. What is your time worth? All right. So, say for instance, you make a garment for a client and you spend 7 hours on that garment, what's the cost of that labor? Of course, the direct cost will include the cost of the thread and all other things that you might be using, maybe the buttons for the garment. Indirect cost, like we discussed, the rent or shop fees, but then the time that you use to make that clothes. What's your time worth per minute, per hour, per second? You have to determine that. And because if you don't pay yourself, you work for free. All right, so these three costs, you have to pay attention to it: your direct cost, your indirect cost, and the cost of your time and labor. And so I want to show you how to simply calculate your total cost per unit. So here's a simple formula that you can adopt. The total cost equals direct cost plus shelf overheads plus value of your time. Total cost includes direct costs plus the shelf overheads plus value for your time. If you've not forgotten, the three costs you have to pay attention to: the direct cost, the indirect cost, and the cost of your time and labor. So that's your total cost. So an example here is Amaka, who makes chin chin and she makes 200 packs per month. So let's try to identify our cost item: flour, oil, sugar, groundnut. Okay, so monthly she invests 25,000 in buying these things. How do you determine the cost of this across the 200 pack? What you have to do is to divide the 25,000 naira by 200 naira. That tells you the cost. All right, the cost of each of this, that is the flour, the oil, the sugar, and the groundnut. So you get the cost of that within the overall cost that we'll see later. She also buys packaging, nylon bags, 4,000 naira. You include that. Transport plus gas plus store plus phone, she spends 9,500 naira. By the time you divide it by 200 naira, you have 47 naira 50 kobo. Amaka's time, we just give a fictitious time here. We see that over a pack, she maybe spends 50 naira, the cost of her time in making the 200 packs, about 50 naira, say per hour, all of that. Total real cost is monthly, she spends 48,500 naira. The cost on the pack is about 242 naira 50 kobo. And for Amaka, she was selling at 300 naira, thinking she made a profit of 50 naira. But our real cost is 242 naira 50 kobo. Our actual profit, which is what you do, is you deduct 300 naira from, or you deduct 242 naira 50 kobo from 300 naira. What is left for you is 57 naira 50 kobo. Missing even one cost can mean she's losing money. All right, so actual profit here is about 57 naira 50 kobo. So how do you determine what price to sell? Don't forget the calculation we did. The real cost is about 242 naira 50 kobo per pack, and she wants to make a margin. She wants to put a margin of 30%. So the math is there: 242 naira 50 kobo times 1.30, which gives you 315 naira 25 kobo. So what's the selling price calculation? The selling price equals the total cost per unit multiplied by 1 plus the percentage profit margin that you want to make. In this case, which is 30%. What that gives you is about 320 naira. So I've made a bit of rough suggested minimum margins by business type. If you're having a physical product, maybe you're reselling things, a minimum of 20 to 30% minimum margin. Handmade home produced goods, 30 to 50%. Services, tailoring, beauty, repairs, food and catering. So a note on market pricing: if your price seems higher than competitors, And typically what people suggest is, oh, just slash your price so that you can be at par with your competitors. But the idea is, first ask yourself, your competition, are they covering all their costs too? Because if somebody is deciding to sell at 200 naira, you need to find out what's their own cost. What's the cost of producing that? All right, so you need to find out if they are covering their costs, because more often than not, many people are not covering their costs. Many solopreneurs are not covering their costs, and so you have to look for ways to reduce costs or target customers who value quality. Of course, don't forget that this is simply a simple example to show to you what you need to pay attention to in your costing. Now, don't forget, total cost is your direct cost plus your share of overheads. So here I've included transport, gas, stall, and phone. Just put all of that together monthly, how much you're going to be paying, you add it to it. That gives you the monthly cost. That is also going to help you to determine how much the cost of making a pack. All right. Don't also forget this simple example. Set a price that actually works. Don't set a price based on the fact that your customer is selling maybe lower and you don't want to lose customers, because if it's not going to help you cover your cost, even though you're making sales, you're still going to be running at a loss. Okay, that's very, very important. So the next part is check if you're actually making money. So do this simple monthly check. Total monthly receipt, total money receipt. How do you do that? The unit sold multiplied by the selling price. So in the case of Amaka, she sold 200 packs in a month, and we multiply it by the selling price, which is 320 naira. That's the total money received. Total real cost is the unit sold, that is 200 packs, multiplied by the cost per unit that we calculated in the previous slides. That's about 240 to 250 kobo. That gives you that VAT number there. Your gross profit is to subtract B from A or A from B, whichever way you choose to call it now. Revenue minus total cost. That gives you the gross profit. So how much was the margin of profit for Amaka? Is 15,500 naira divided by 64,000 naira, which is the total money received multiplied by 100 tells you that she's selling about 24.2%. Now, I've made some indicators below to help you identify certain things. If it's above 25%, good, you're profitable, keep managing costs. If the profit margin is between 10 and 25%, is very fragile. In other words, one bad month could wipe your profit. Below 10%, you're in the danger zone. Zero or negative, you are losing money, so you have to recalculate before selling more. All right. The whole idea of making sales is to not just rack in numbers, not just have a lot of money being received. It's that you want to make profit. As a solopreneur, as a microbusiness owner, I assume that, except that maybe you have other things financing you, you also want to use that money to finance the business and also maybe take your certain things for yourself if you're paying yourself a salary, which is advisable. All right. And so if your profit margin is very minimal, or you are not imputing all the cost, you might even be having a higher profit margin, but the truth is that you are not calculating all the costs, right? And so you're still going to lose money. All of a sudden, you just find that the business is shrinking. So very, very important things that you need to do. You have to do this monthly check, and of course, I will not forget to mention that you have to keep records, because the only way you are going to be able to do this calculation effectively is that you're keeping your books. So 3 questions every business owner must ask. What does it actually cost me? Add up all your costs, materials, transport, packaging, overheads, and your time. Divide total by units to get your cost per unit. Am I pricing for profit? Am I checking the numbers monthly? All right. What does it actually cost me? Am I pricing for profit? Am I checking the numbers monthly? Very, very, very important. Compare what came in versus what went out at month end. If you're not checking, you're guessing. And guessing is how businesses quietly die. And so, just about as you're watching this video, I want you to do a couple of things for me, starting from now, starting this week, whichever time you get to watch this video. First is write down every cost, direct and indirect. Second is estimate your hours and what your time is really worth. Calculate your total cost per unit using this guide. Check your current price. Are you actually profitable? Adjust your price if needed and explain the value. And repeat this check every month. This will take you a few minutes, but avoiding to do it will cost you a lot on the long run. But taking our time to do it will save your business a whole lot more than you can imagine. Remember this always. Revenue is vanity, profit is sanity, and cash is reality. I'll take it again. Revenue is vanity, profit is sanity, cash is reality. Know your numbers and your business will know where it is going. As a matter of fact, know your numbers, you will know where your business is going, and you will be happy. Alright, so like I said in the beginning of this video, I made a video earlier on about how you can grow your sales. But then it's also important to know that as you're growing your sales, you need to be sure your sales is growing and you're actually making profit. That's the essence of this video. So watch this video, go back and watch the other one too if you haven't, alright, and put them both together to see how you can grow your sales and how you can ensure that you're making profit. I'm rooting for your business, and I invite you to subscribe for more videos like this. Thank you for watching, and don't forget to also share with somebody in your corner.